good evening. My name is Jeremy Hans. I am a co-founder of Climb Capital. Thank you for your time tonight. If you're watching this after the fact, really excited to kind of share with you what we have going on right now, which is RV parks. A little bit about us. Climb Capital has been around for the last couple of years, but really Climb Capital in its infancy started about 8 or 9 years ago when me and Bob, the other co-founder, met trying to buy a mobile home park. And I want to be very clear tonight that we're not talking about mobile home parks. We're talking about destination RV and campgrounds that people would go on a vacation, right? So this would be a place that somebody might pull in their fifth wheel or their travel trailer or their Class A, stay for a couple nights, a week, maybe a longer amount of time. And this would not be considered a mobile home or a place of residence for most people. So we believe that this is the best opportunity right now in the real estate space to really make great returns. Tonight, we want to talk about 3 ways that we are working at Climb Capital to double our investments with RV parks. So with that, let me go ahead and get it kicked off and get to our actionable items here. So the first here is amenities. RV parks inherently are outdoor hospitality assets, meaning unlike an apartment or single family house where you can charge rent, it's not unusual to be charged extra for extra services or extra amenities or at a hotel. The same thing would apply with an RV park. If you want extra things, you're typically willing and able and would expect to pay extra for those things. And we at Climb Capital have found there's a lot of things that we can offer that don't necessarily take a ton of effort or time or money, but provide a great experience for our guests and provide a greater return for us as the owners of the park. And so here we have a few of those things you can see. So consider kind of the RV in the middle, kind of the base rent that you're going to get from people coming to stay for a night, a week, or maybe even a month at a time. But then around that RV are all the other things that we are using currently or are actively looking to use to sell to our guests to enhance their experience, but also to increase our return. And so we'll start on the top right? So kayak and boat rentals. We have this at a couple of our parks. We're offering the opportunity for somebody to rent a couple $100 kayak or paddleboard. And it may not be a lot of money, but we get the liability waiver. We give them the correct gear that they need to use it, and then we can make a pretty great return. Taking a small paddleboard, or a kayak, or a paddle boat to be able to sell that off as an amenity, but also make a return. The other thing would be fishing bait, right? So we like to buy parks that are on water, and so if we have an opportunity for a stream or a lake or even the ocean, opportunity for people to get out there and be able to use that water in a usable way to include fishing, providing that is a pretty awesome way. Pavilion and venue revenue. And so a couple of our parks have either big barns or big meeting spaces that have been used for, either wedding events, birthday parties, reunions, or just family gatherings. And so we find that sometimes our spaces can be really conducive to larger groups because we have more space and just more place to put people. On top of that, we can then sell them the upgrades of staying on the property in those RV spaces also. Laundry is a big one that we see not only in the multifamily space, but also in RV parks. And not only is laundry a great way for us to make a little bit of money, but those people who don't have laundry in their rigs themselves find this to be a huge amenity because they don't have to go into town and find a place to stay. You got personal dog runs. This is something that new that we've started seeing popping up in the industry. We haven't implemented it yet, but we're very close to doing so in a couple of our parks. And that's where there is actually a dog run built that is right next to the actual RV space. And so if the traveler has a couple pets, they can have their own space to hang out outside. They don't have to worry about, watching their dog 24/7. They can let them go out there and play, and they can have kind of a little bit of breather from having all that time inside the vehicle and or having to keep their eyes on them or keep them on leash, which would be usual in most other places. High-speed internet. This is one that sometimes surprises people, but a lot of our parks, we have basically 2 levels of internet. We have the basic level. You can check your email, you can go online, you can make reservations. But if you want to stream Netflix, you want to high-speed game, that's going to take another higher level, like a gigabit speed of internet. And so currently we're charging an upcharge for people to use a higher speed of internet than kind of just the base rate. We think that provides a little bit better usage too. And so everybody can make sure they can use the internet, but if those people who want to be the biggest users are going to pay a little bit extra for that opportunity. Firewood's a big one. This is one that I didn't even realize existed until I got into the RV park space. But we want to have 2 things here to be very important. If we're selling firewood, we want to be able to sell it and make money, which is important. We'll show you the numbers. But 2, this also allows us to have a little bit more control of the fire pits and what people are doing around the park. Meaning, I don't want people just cutting down trees or bringing them firewood, throwing them into a random pit, and then just starting these massive fires. Why? Because I was one of those people 20 years ago that might be setting fires, 10, 12 feet up in the air. And those are not things that are typically conducive for good order and discipline or allowing that park to continue operating safely with a lot of people. Propane's huge. A lot of these RV and travel trailers use propane for both heating and cooling. Sometimes water, also sometimes the actual heat and air. And so by selling propane, right, we're providing them the ability to just kind of fill up. And oftentimes a much easier way because they can actually plug it in less having to go haul it in somewhere that might be harder to reach or harder to turn around in. So where that propane is placed in the park is also very important. And finally, golf cart rentals, right? So we don't do this currently. We're looking into it at a couple places, but the opportunity to rent out golf carts and so people can get around some of our larger parks easier, and then also to pay the premium for those parks. So what does it actually look like, right? So these are some of the actual numbers that we're getting right now for some of our parks. So firewood, we're selling and buying in bundles. And so we've got a pretty good $3 spread there per bundle. And so we're seeing at 100 space park, we're seeing about $17,000 a year just in firewood sales. Propane's another one. We typically buy in bulk in massive containers. I'm sure you've seen before. We're paying just under $2 a gallon right now. We're selling for about $3.50 a gallon, making almost $5,000 a month in one of our parks. High-speed internet, we're seeing enough people kind of doing that to again push that $4,500 mark. And then currently, we bought a park in Nashville North. We'll talk about in a second. 100 space park. It's made about $29,000 last year in just its camp store alone, selling T-shirts and snacks. And this is a park that's kind of busy enough that already needs full-time staff. And so it's pretty easy to add on just a few retail sales and not, break up, cost too much more headache for actual management. So what does that look like, right? So this is Nashville North. Nashville North, we just closed on a couple months ago. It's a formal KOA, just a couple miles north of Nashville, just off the interstate by about a half mile or so, and a pretty decent sized park. Now, I will say this is a park that doesn't have really any room to expand, right? So we've kind of maxed out the capacity inside this park, inside of this geographic footprint. All to say, there's no really extra amenities we can add because we've kind of added all we have. Last year, it created just $102,000 just in ancillary income, not just in these other amenities, right? So these are other things that are adding value to the park. And we'll kind of show you in a second kind of what that means in comparison to either giving these things away or not providing some of these services when it comes to actual valuation and returns. The next one that we really like at Climb Capital is property expansion. And so when you're buying an RV park, you're often buying a large piece of land that may only have a small piece that's actually been developed. And so for us, we get really excited. We typically don't want to develop parks from scratch. That's an expensive and time-consuming process that doesn't have any guarantees that the government or local municipality will support, and means that our money and our time is going to be wasted for years without any return until we finally get to that completed park. Instead, we love buying parks like the one you see here, which is here in Milton, Florida, a park that when we bought was about 42 spaces, and we're now almost 70 spaces, and been able to cash flow the entire time as we're expanding the park, adding new amenities because it's already in operation, and we don't have to start from zero and just kind of take our time as we go. So you can see here some of our parks that we currently have, some of the green spaces. Most of our parks come with some developable land, right? Whether that be up in the top right, the opportunity to almost double the size of our park based on the acreage that we have available, or maybe it's only a handful of spots. When we start seeing the cost benefit analysis of some of this expansion, you start to see why we get so excited. So this is a kind of a case study here of one of the parks we bought last year. This is Coleman Campground in Coleman, Alabama. When we bought the park, it was 88 spaces, but we knew based on the way it was drawn out and from the sellers, right, there was opportunity to add another 20 spaces to the park, and that the cost wasn't as big as maybe developing from scratch because there was already roads that ran through it. There was already water and electrical up to it. And simply, we needed to actually build out the pads themselves, hook up the electrical to a pole, make sure that all the plumbing was attached, and that we could be ready to kind of put these sites right in. So all in CapEx, all the money spent to add these 20 additional sites was about $80,000, 20 sites, that's $4,000 a site. And then each of these sites rent for $550 a month. So think about that, right? By putting in this $80,000, we're able to generate in 1 year $105,000 in new revenue. That's awesome, right? Any kind of investment where you can make all of your money back in the first year is definitely something to be doing. It's one of these reasons we're so excited about some of these RV parks and some of the opportunities. This expansion inside of an already operating park is really what we think is kind of one of our differentiators at Climb Capital as we're looking for deals going forward. Not only do we like expanding parks, adding more amenities, but we really think about RV parks right now and kind of the timeline of other assets that you can invest in. If you start to think about over the last 10 years, what has happened in commercial real estate, you had apartments go institutional, meaning money came from New York City, from Chicago, from the West Coast. And they started buying these apartments all across the country. What happened is as more and more kind of institutional big money came in, the prices continued to go up and the values and the returns continued to go down, right? The cap rates continue to decrease. And why is that? That's because these people saw these hard assets as something they wanted to buy. They had the available capital and they were willing to bid up the pricing to be able to get access to these hard assets. Well, as the apartments continued to kind of race up in pricing and the returns decreased, the money was still looking for a yield, right? So they moved on to the next asset class. So one of those other asset classes became self-storage. You saw the pricing of self-storage do the exact same thing. A few years later, it was mobile home parks that you could have bought for $10,000 a spot 5 or 6, 7 years ago now can trade for $70,000, $80,000 a spot, right? We've seen it in single family homes when we had these iBuyers buying up large swaths of houses in an area. Not all of them were successful, but you can see them kind of bidding up the pricing on these houses. Short-term rentals have started seeing a run up, and we really think the next asset class has this opportunity is RV parks, right? RV parks are hard to manage. There's not a lot of people doing it, and it's not been an asset class that's ever really made sense until recently. And so Climb Capital, our Campfire Fund, we really believe by taking lots of these RV parks and putting them together, we have an asset that becomes much more desirable for one of these institutional buyers who are running to the space. So what do we got, right? So if we have one campground, right, it's worth some money. But now if I can sell lots of campgrounds together to a single end buyer, now I can make lots more money. And the reason behind this is quite simple, right? For a lot of these institutional investors, they have large teams, they have large amounts of money that they're trying to invest. Making a slightly higher return typically is not as important as making a return on all the money they have to place. Placing the money becomes important. So the larger the purchase of all these different things, they can A, have some diversification, but B, they can use more of that money. So this entirety of all these parts together becomes something that becomes more desirable and therefore willing to be paid for at a higher level. You can think about it simply too as if I'm trying to sell one park, that one park now is worth something to an individual, right? So there's an individual who wants to buy that park. They're willing to go out and they're willing to pay, but they want a return for their effort, for their time. If you're not selling a portfolio, you're typically not selling to an individual. Now you're really competing about this institutional grade quality across multiple parks, across multiple buyers, right? So you can really see a lower cap rate. You see here, we believe probably about a 1% cap rate reduction by selling as a portfolio. And you can see what that does on an NOI of $6.5 million. If you go from a 7.5 cap, it's about $86 million. But if you go down to a 6.5 cap, just that 1% reduction by selling as a portfolio, we believe you add another $14 million by putting and pooling all of these RV parks together. So let's look at kind of what this means as a case study when it comes to a 100-unit park. We bought for $5 million. We put 30% down on, right? So we spent $1.5 million. We're going to get $1 million a year in base income, right? So we're going to assume this is just kind of a standard. We're getting on average about $1 million a year, and our expenses are right in line and therefore right about $450,000. That leaves us a net operating income of $550,000. That's great, but Climb Capital is not looking to just do great. We're looking to do better than great, right? So we're going to buy the same park. We're going to not say that we're going to be able to add more income from just the rents. However, we believe at Climb Capital, we often have the opportunity to do that. Either A, updating rents to match whatever the market is, focusing more on the higher rent growth. So that would be things like short-term and nightly rentals and or short-term rentals in like cabins. We can considerably make a much higher revenue per spot, but we're also going to add back into that ancillary revenue, right? Let's think back to that first point, right? We can add more amenities that we can sell. So we'll add another $100,000 just providing more things to people that they want and that they're willing to pay for. And then we're going to expand and add those 20 new sites. We add another $105,000 a year. Now, listen, with the increase of the new amenities, with the new sites, there'll be increased expenses, right? We're going to have to pay our managers a little bit more. Maybe we need a little bit more help. Maybe there's some other things we have to fix. But even with an increase in expenses, now we see our net operating income, that money that we're making from operations has now increased by over $100,000 per year. What does that mean? Well, if we look at the cap rate, right, valuation now, this original $5 million park, now being ran effectively by Climb Capital at a 7.5 cap, is worth 8.8, right? $8.8 million. We've made $3 million. We put in 1.5 million. So we've already doubled our money, right? Just by selling this park to another individual buyer. But again, our plan with the Campfire Fund is not to buy one, but buy 10 to 20. And so now we're bringing all these parks together, and we're going to get that lower cap rate. We're going to take another % off. Now our valuation on this park is closer to 10 million, 10.2 million. So again, we put in 1.5, right? We took a loan, right, somewhere in there of 3.5 million. And now we have $10 million at the end. So you take the 10 million, subtract the original 5, you've now made another $5 million on the $1.5 million investment. Now you're talking about big money that has been leveraged and is making you a bunch of money. Specifically, an unlevered profit, meaning if you had no mortgage at all, right, you'd be making $5 million. If you put it back down with a loan, something that we typically try to do with low loan to value numbers, we see a leverage return of 343%. This is what gets us excited. This is why we invest in RV parks. We believe that we have an opportunity to well out earn almost anything out there because of our ability to know the market, to see the opportunity, and to take advantage of the opportunity at a high level. So let's talk about, great, how can you be a part of this, right? Not all of us can run out tomorrow and go buy our RV park, or even worse, try to go buy 10 or 15 RV parks all by ourselves. That's where Climb Capital has created the Campfire Fund. The Campfire Fund, simply put, is an opportunity for us to buy multiple RV parks in the Southeast. And what are we buying specifically? We're buying companies, we're buying parks that are close to desirable locations. So we're being really picky about the types of parks that we want to buy, because we want to take over parks that we know we can make money on. And those are places that we know we want to be ourselves. So it's a little bit of land banking. It's a little bit of where would I want to be with my own family? And it's a lot of bit of where are people close to this park that would be coming here to use the facilities. And so finding the desirable locations includes things like near water, includes near major population centers, and it definitely includes near major highways. It's got to be easy to get to, and it's got to be people that are nearby. One of the reasons this has become really important to us is gas prices. Gas prices have gone up this summer, come back down. But as gas prices started to rise, what we found is a lot of our RVers were going to continue to RV. They had spent the money on the RV. They enjoy the lifestyle. They want to get out of the house. They want to go on vacation. They may not want to spend the thousands of dollars it's going to take for them to drive all the way across country, but they are likely to still use that vehicle they've invested in to go maybe a couple hours outside of town. And so even when gas prices jumped up, what we saw is we lost some of our reservations for people that were thousands of miles or 1,000 miles away. But anybody inside that 300 or 400 mile range typically was still able to make that work, even with the increased gas prices, to come to our parks and to take their vacation. The next thing we want are amenities. So we want amenities either already on site or the ability to add amenities. We already talked about water. Water is huge for us. Laundry is big for us. And then after that, anything else that we can add that can provide value to our guests is something that we want to provide and be able to charge for it as we go. The other thing we really like about RV parks is their mom and pop dome. We talked about the institutional investors, that when they come in, right, they institutionalize and they professionalize the operations. A lot of times what we find are our sellers are typically people who work and live at the park. And it's maybe their thing that they like to do, or maybe it's something they just fell into, maybe it's something they just fell upon, but now they've been working into it. And so oftentimes what we find is they haven't seen kind of the forest for the trees, and they're so busy working day to day that they forget, hey, there might be a better way to do this. There might be a way to increase our income or to make the operations easier and more professional. Things that we have found: not using online booking, not charging correct rates, not throwing people out of the park that were causing problems because they were friends or they had been with them for a long time. One of our favorites is just simply using professional software to be able to kind of maximize revenue when it comes to our bookings and our reservation system, making sure that we're filling out all of our spots to the maximum spot possible each and every night, and looking forward ahead with reservations to make sure we're fitting people in wherever they can go. And then finally, it's the potential to expand, which we already talked about, right? We want to be able to expand these parks, add on more opportunities to either add amenities or, more importantly, to add more spots so we can bring more people in to experience our park and to be able to also pay us for that privilege. So specifically what we're trying to do right now is we are raising $20 million inside the Campfire Fund. This is a 506C, meaning that you have to be an accredited investor. If you have any questions about what that means, please reach out to our team. We'll be glad to walk you through it. But what we're doing is we're buying these RV parks across the Southeast, really looking from Arizona all the way to the Carolinas, but really focusing heavily here in the Southeast ourselves. We're in Pensacola, Florida, so we like things kind of in the area that we can get to quickly. And what we're finding is that we've created two classes for our investors. The first would be the B1 class. The B1 class has an 11% preferred return. It kind of is first in line to get cash as cash comes out of these parks. You're capped out at that, but you're getting that 11% return on any of the cash flow that's coming out. And if we are unable to pay that as we go on, you have to be caught up to that 11% before us, Climb Capital, makes any real upside on money. The second class would be somebody who is willing to accept a lower preferred return, 7%, but then gets the equity upside, meaning that anything over that 7%, we're now going to split 60% to you, the investor, and 40% to us, Climb Capital. And so two opportunities here, depending on kind of what you're looking for. If you're looking for more cash now, or if you're looking for a bigger payday in the future, we think we have got two options that kind of can fit most everyone's needs. The other thing we like to remind people is if you want to do both, we'll take investments in both, right? You can split that investment however you see fit and however works best for you. Here's a quick snapshot of the RV parks that we currently own. Two parks are highlighted in black. Nashville North in Nashville, Tennessee, and Arrowhead RV Park in Crane Hill, Alabama are parks that are already owned by the Campfire Fund. Campfire Fund started this year as a 506B, close friends and family. We raised about a third of the money we are looking for, and now we're opening it up to other people, and we're providing this opportunity to continue to expand. So 2 parks currently owned, and we're still looking to move to another 8 to 18 parks as we find those deals and as we continue raising money over the next couple of months. Here's the team. Campfire Fund is being sponsored by Climb Capital, which is me there in the middle, and Bob's, who co-founded a couple years ago. But the truth is, Climb Capital was well paced outside of Bob and I the last few years. So we have a really great team here. You can see 5 of our members, but even growing outside of that. And we've also brought in a couple other sponsors. So we've got Cliff Luber from Upward Capital. He's based out of Virginia in the DC area, and he's helping us on the East Coast find deals, help with any kind of asset management. And then we got Tess and Doug, a brother-in-law and sister-in-law off the West Coast out of San Diego. We're helping us out on the West Coast side, doing the exact same thing. We really think we have the right team as we go forward. I don't think we have a step. The other thing you don't see here, and I think is probably maybe the most important, and why probably you should invest with us than trying to do this yourself, is Climb Capital's wholly owned property management company called Altitude Property Management. Bob and I had a problem a couple of years ago as we started buying some of these small mobile home parks and then into RV parks, that there was not really a professional management company locally that could do the job at the high level that we expected to treat our customers, treat our guests, treat our tenants the way we wanted them to be treated. And so we eventually said, hey, we're done with trying to find every single person going through the entire Rolodex. It's time to do it ourselves. So we brought property management inside to Climb Capital through a subsidiary company called Altitude Property Management. And we have turned all of our focus in the last year over to RV parks. And so Jake there, our director of property management, he oversees all of our property managers. And we are super excited that we've been able to create a process to be able to take non-property management, people who have the right skill sets, the right character, the right attributes, teach them about property management, teach them how to run a business, and then kind of give them the keys and let them run inside the bounds that we've set kind of for Climb Capital's properties. We've had a lot of success with that, and it's one of the reasons that we're keeping south of the freezing line so we can keep these properties staffed year-round with our employees and not going by stuff that shuts down seasonally or stuff that maybe wouldn't be able to be open year-round. And so the Campfire Fund team, the Climb Capital team, the Altitude Property Management team, we are a 100% invested. RV parks are our thing. We're super excited about the opportunity, but we only think we have a couple of years to kind of outpace what we believe will be a huge investment and run up in this asset class. So if you're interested, send us an email, right? We want to talk. There's a lot of other things you probably have questions for. We want to talk you through that. We want to be able to provide you the opportunity to see this stuff. You can send that email to info@Climb Capital, or if you want to just see some more information, you can go to rvparks.climbcapital.com. So I know that was kind of quick, a little bit of furious, but I'm going to open it up to any questions that we have in the chat. See if anybody has. Anybody got any questions before I bounce out of here and send everybody back? Wonderful families tonight. I don't see anything, so I'm going to end it there. Pretty quick tonight. But remember, if you're looking for an opportunity, we think hard assets are the place to be right now. The stock market's gone crazy this year. Interest rates are really jumping up higher. The question we sometimes get is, how is that affecting us? It's affecting us really in 2 ways. One, of course, the interest rate, the debt is more expensive, But we kind of foresaw this coming. Climb Capital kind of made the pivot to RV parks a year and a half ago because of this, right? RV parks generally are harder to finance. There's not tons of people, not tons of banks that are kind of really specialized or focused on this asset class. And so we're buying most of our parks with bank debt, meaning that us at Climb Capital, we're signing personally for the debt. Our limited partners, you, the investor, have no liability for the debt itself. So that's one thing that we're doing. But because we're doing that, we are delevering. We're not taking as much of a loan on each property so that we could be ready basically for what's happening right now for these rising interest rates. And so instead of being in an apartment complex where you're leveraging these properties 80, 85 or more percent sometimes, we've already naturally kind of delevered by starting in properties that we're only levering up to 60% anyways. It means that the interest rates, though they affect our financing for sure, don't cause us to not be able to sleep at night because we can't get valuations. The second thing that we're finding, though, that is probably a little bit more interesting is that owners of parks right now don't understand valuations. And so because RV parks are kind of a newer asset, they've not been an investment class for a long time, a lot of times what we end up doing as we're talking to these sellers is we're almost becoming educators, right? We're kind of setting the market for these people, kind of walking them through valuations, how the market's working, how the market's moving. And we're trying to get in front of these people by being not only an advocate, right, for the industry, but an advocate for them, allowing them to transition out of whatever they've been doing. And a lot of times actually getting in an RV and being able to enjoy the RV lifestyle. And so rising interest rates, even rising fuel prices, we believe even with these things, there's still lots of opportunity in the RV park space. We'd be glad to talk about it more. Just reach out to us. So again,
Jeremy, we have a question. Someone asked, do we have a target cap rate when purchasing, or is it big picture, expansion potential, etc.?
So a cap rate is really valuable when you look at a stabilized property. But if we're buying properties that don't have amenities, they're not being professionally ran, and still have room for expansion, that going in cap rate is kind of a useless or maybe not as useful tool. So our cap rates typically that we're looking for are going to be a spread over whatever our debt is, looking for about 2%. But if I can buy a property that has a terrible cap rate, but I know in the first 3 months I can raise the rents from $30 a night to $90 a night, and I can add another $100,000 or $200,000 in ancillary income because I know the demand's there, then I may pay a lower cap rate than is maybe market, knowing that I can get that stabilized cap rate very quickly and we can exercise that upside in value. And so when we think about cap rates, we really think about those as stabilized assets that we sell to, not necessarily that we're buying really high or low cap rates when we're going into the property. Cameron, you got anything else for us? Any other chat questions?
Someone asked what the minimum investment was. I sent a message out, but if you want to go over that, you're more than welcome.
Yeah, so the minimum investment for the Campfire Fund at this time is $50,000, and we'll gladly take all the way up to millions. So if you're interested, please reach out and talk you through that. All right, so it's about 30 minutes in. I'm going to call that a complete night. Thank you for joining us. Thank you for your time. Please reach out to me. Please reach out to the team. We'd love to talk to you more about why we think this is the opportunity right now, and to make sure that you are incentivized, right? I want you to recognize that B1 share, we're only going to take a limited number of investors on that. So if you're interested in that, you need to reach out fast. That one is filling very quickly. And for the B2 shares, right, we are also going to be adding the depreciation opportunity. So we'll be doing some cost seg studies on these RV parks, providing you a big tax savings this year and going forward. So if you're wanting to do that, make sure you invest quickly so you can get into that before the end of the year. Thank you for your time. Thank you, Cameron, for helping out in the chat. And next time, we'll see you.